Okay, you guys can go ahead and acknowledge got it. This is for Sunday, the week of August 28th, obviously the last week of September. So this is the third quarter where we have July, August, and we're getting ready to go into our third month of the third quarter before we close out for the year for the fourth quarter. So things get really, really interesting around this time. A lot of folks in the markets, it's been kind of a ranging market, if you say, for the last month when it comes to the indices and crypto and things like that. But now for the next 2 to 3 months is when you're going to see a lot of the volume come in, because it's now kind of summer is over. Folks are coming in to wrap up the third quarter and then hopefully for the fourth quarter. So this is when things look to whether, if we've been down for the last couple of months, this is a good time to regain yourself and recover. So I call these last month and a half the recovery month. I love that. So let's look into the calendar and see what we see for the week in terms of the calendar. So, obviously Sunday, nothing much. Monday, not much there. So when it comes to Tuesday, we got the Euro preliminary CPI data. Hopefully this would be enough to, strengthen Euro. Euro has been weak all week. Then we have the consumer confidence here, job jolt on Tuesday. This will also impact gold and Bitcoin and indices as well. This is on Tuesday. And that's it. Nothing much. So you can assume Monday and Tuesday is going to be kind of your normal range in market, maybe, the typical ADR, nothing crazy. And then when you get into Wednesday, Wednesday's oil, obviously, oil inventory. And then you also have the Euro CPI flash. And then you have USD, FOMC master speak, and then ADP employment week change. Because this week coming this Friday is when we have the non-farm payroll, right? So this is non-farm payroll week on Friday. So what typically happens on non-farm payroll week, right? We normally have a ranging week, not a lot of volatility kind of leading up to Friday, and then boom, Friday kind of shakes everything up. So Wednesday, not a lot of red folder there. On Thursday, we got chef CPI data, so this may have an impact on Swiss francs, and that's it. You got ISM PMI data at 10 o'clock. That might have an impact on indices a little bit, unemployment claims, maybe, but I don't see a lot of red folders that's going to significantly impact a lot. So it might be in the normal ebb and flow of the market. So, and we'll take a look at the chart in a minute. And then Friday, of course, we just have USD non-farm payroll, not the CAD, just the USD non-farm payroll. So let me go ahead and pull up my chart. Before I go into the normal chart, is there any particular chart someone wants me to go and prioritize and take a quick look at? And other than that, I'm just going to go through the normal flow of things in terms of dollar, gold, and things like that. But if there's anything specifically you guys want me to take a look at, please feel free to type it into the chat and I'll specifically take a look at it. Okay. So first of all, let's start with the dollar. Okay. So the dollar has been interesting this year, right? Let's go to the weekly chart. So you can see the dollar here from a weekly perspective, right? Let me pull up the data here. And we're going to look at a higher time frame, and you can see how it exceeded this mark, and it's up in this mark right here. Well, it exceeded a little bit, which is the 108, right? And if you look at it from a total standpoint, this is a crazy amount, which is 120, which was back in 02, down near 20 years ago. I don't see dollar going that high. I really don't. I didn't see it go above this high, but I don't see it going that high And let me drop down to a lower time frame and tell you what I'm talking about, because you can see from right here, and I don't want to spend too much time in coachings here, but we can see we're way overextended the market, right? So anything in this area, it's just not going to keep doing this. That's not what I see. I don't see that with the dollar, and I don't for the market to continue to do this. That means the indices market is going to continue to dwindle down, and then we're going to see some conflicting charts technically on why the dollar. It does not make sense for the dollar to continue going up and the indices continue to go down technically. As you can see right here, we're overextended in the market here. We're overextended there. We're overextended there. When the market rises this high for this long, when it comes to the indices, they got to get rebalanced, right? We got to come back here. We haven't been back here, let me see, since 2021. So May 2021, we haven't seen the market come down. So we got to have that ebb and flow of the market, right? What goes up, come down, and it looked like it stays up and it stays up forever. I know, trust me, it's horrible. It's a horrible feeling. So let's drop down to the daily. And okay, so you see this, we're kind of in this wedge, right? So this is kind of an auto trend line here. So it's in this wedge. It's coming up. It went up to as high as 109,294. Okay, so that was a previous weekly high. Now these markers are coming up from Sonar Lab, which is a pretty good indicator because it helps you determine where the previous weekly high, previous weekly low, previous daily high, previous daily low, right? And then you can see where it created higher highs, higher lows, come up to 109,294. And I was waiting for this break of structure here. This is what I was waiting for. I was waiting for that break of structure to determine that, hey, this looked like it's going to be coming down and we could be looking at a very good, strong trend coming down. I'm going to put a yellow chart here. So that's what I was looking for. I was looking for this break of structure. It did not come, and it came down to this structure here, which is obviously the kind of a trend line, and it went back up. And that's when I said, oh my gosh, we're just right into this range in market where the dollar just won't stay down, right? We're here, and I can see it coming here, but we need to have, it's not so much this break of structure, it's this low right here. That low right there is a key break of structure. This is the key, right? We need to see this key break of structure for this market to say, okay, we're fully into a good bearish downturn. And now we can safely say the dollar is going to continue to get weak and then follow through all of the levels that we talked about. But right now, we're still in that bearish market, and it's the buyers are in full control at this point. Now, here's a good thing. If you look at it, you can count the days here. 1, 2, 3, 4, 5. This is a whole week. It did not break. Did not even reach 109, came close, but it didn't break, right? In fact, it came down and touched the 107 price point for the daily. And then of course we have some imbalances here. Oops. Get that out the way. You can see we got some imbalances right here that was created. And then we had another one created right here. So here's the thing that we're looking at. Now, I'm not going to say it won't break. I won't say that because it could come up and test go to the weekly. This right here, I doubt it. This would be insane for the dollar to continue to go up and push that high, right? Especially if it hasn't, look at this vertical move here. it hasn't even gone 50%. And come here. It hasn't even, on a weekly basis, it hasn't even gone 50%. So in other words, this is what I'm looking at. I'm looking at this particular level, and this is where I like to see the dollar come to from what I'm looking at. Now, I'm not sure if you guys pull it up on the weekly charts, but if you look at it, these are some really good, strong levels. When I'm looking at it, I'm going, okay, this is nice. Okay, there's some really key levels here that I'm seeing that I like to see dollar come back, right? Before it comes back up. So a lot of people say, well, the dollar is just going to keep going up, keep going up, going up. Well, yes, that's possible. But here's my question. You don't think it's going to at least come back to mitigate at least 50% before I decide to go up? So in other words, yes, I can see that it's possible that the dollar could go as high as the 120, as we see right here, 120. But I don't see that going up without coming back to mitigate at least that 50% level here. Now, it'd be nice to say dollar can come back here in an ebb or flow, range from an equilibrium standpoint. But I don't believe it's going to go 120 without coming back to retest this, to mitigate this area 50% to come back up. Okay, especially when you're seeing the market to continue to rise like that, and then hasn't even come back. Okay, now once it comes back here, and if it's here, and I see prices here, then I would be ready to buy. I would, right? From a day swing trade standpoint and perspective. So I'm bearish on the dollar because obviously I don't want to buy the high unless I'm scalping, right? If I short USD or if I short pound USD, it's because I'm trying to get 10, 15, 20 pips, if that. Now, I may consider that depending on what's going on, and we'll take a look at the chart right now. But from a long-term perspective, on a higher time perspective, this right here, to me, it's definitely a dime bearish double top situation on a weekly. And especially on a daily, when you're seeing that this level right here, the 109, is having a hard time breaking this after 5 days. So I do expect to see a pullback. Now, I'm hoping that, if we see another 3 or 4 or 5 days, obviously it's non-farm payroll, that might be the deciding factor to determine if the market is going to go up and break this structure or come back down, right? Technically, I don't see it breaking, but fundamentally, it could peak out. It could liquidate this area and then come back down, but I don't see it going back up above this. But I'd like to see it coming down. So let's look at gold real quick, and then we'll go into the indices. So this is gold futures. Let me go to gold here. Let me pull it up on the weekly so we can get a bird's eye view, right? As you guys can see, we've been double topped here. And then we have a strong band of support here. Very strong band. And this is very, very good. This is really, really good evidence to say this is a very strong demand area. I think everybody here in this room can say, yeah, that looks really, really good. I'm going to tell you what else looks really, really good. It's when you're at the bottom of this band and you're in oversold conditions. Can we say we're there yet? Absolutely. Now, for 2 weeks, it's been kind of bearish. So let's dive deep into the time frame. So that's a weekly. So from a weekly time frame, we can see that this this band is holding up very, very well. And when I mean this band, this zone right here is holding up very, very well. Okay, so let's go down to the daily. And this is on gold. So we can say, you can see where, you can see this trend line here, this trend line break, right? Or it kind of rolled around that trend line and then it broke and it kind of went to this order block right here, right? This is institutional candle right here. And that impulse candle created an imbalance. It fulfilled that imbalance, hit that 1802, and then it came back. Now, this is in terms of this past week. So we got Friday and it was up 3 days. So Monday, Tuesday, Wednesday, or Tuesday, Wednesday, Thursday, and then Friday, a full day. It kind of just basically faded that whole move, right? So what can we say about that technically? Well, there's a couple of things that we can say. Well, first of all, right here, this is our demand level, our support level, and this is our break of structures resistance level there. Now, it closed bearish, and there is momentum pointing to the downside. That is a possibility, okay? And I'm not going to say that the gold can't come down. I will say it could, right? But I wouldn't be willing to buy until it breaks that structure there to be on a conservative side. But let's throw the fib on there, right? So we have the demand and we have our discount and premium, right? So this is our premium, this is our discount. It came down, hit the 618, came back up, and it's down to the 618 level again. This is a very good area to be aggressive if you wanted to go ahead and plus a pending buy here. So if you wanted to push a pending buy here, I would say yes, that sounds good. And then, or if you wanted to place some pending buy here, this would be good in terms of buy limit. You can put a small test size here and see if it's going to go ahead and take that bounce, you know, up, or come down and take that buy going up. Okay. Now, there is a possibility, of course, that it could come down here from the previous monthly low and then bounce up. Okay. But we can definitely say at this level, this yellow line is a very, very strong level for gold. For it to drop lower than 1700 and stay down there, no. Not when we're in a state of economy the way it is fundamentally, right? Now, think about it from this perspective as well. You see this trend line. It hasn't broken this trend line until it finally went up and hit 1802. Everyone thought gold was going to go up to the moon. And I knew it was going to be a pullback. And I was looking for it to buy. It went up, and now it's in that buy opportunity now. When it broke this trend line, this out of this channel, that's kind of a warning shot over the bow that says, look, I'm looking to go up, okay? That is possibility, and that's going to happen real soon. Came up, liquidate this area, cover this imbalance, come back, and now it's back at the 618 level. Could it come back to this 786 and 6886? It could be. If you wanted to put a cheap 0.01 lot size buy here, and then put a nice 0.01 here or 0.02 and another one here, you are looking to get into some really good trade momentum. As we know, this area right here is our target from a POI, okay? This target right here. So this is price 1950. This is where I'm looking for gold to be at by year end, okay? Now, our first target, of course, is 1802. This is on the daily chart. I can see it pull back a little bit. It could, or it could hover around here and then finally shoot up. It could dip a little bit and then shoot up, or even a little bit lower and then shoot up, okay? but this is in a nice buy area now. It wasn't in a buy here, but when it pulled back, that was a good buy. So if anybody got into a good buy there and made some money, that's great. It's come down. We're back in that area again. This would be a good test area buy here or buy here. Or you can be a little bit conservative and say, you know what, let me put a buy stop so that I would go a little bit higher, maybe even, maybe not that high, but somewhere around 1749 or 1765. You can put a buy stop if you wanted to play it safe and say, hey, I'm waiting for it to break structure. And this would be aggressive break of structure, but this would be a nice great break of structure right here. 1765, maybe a little bit higher, like at 1767 on gold, and put a buy stop and say, I'll let it dance all over here. And then when it breaks out, I want a good confirmation of a breakout. And then you can play that here. And the reason why I say play the breakout safety here, because you're just playing it conservative and maybe you don't want to get aggressive down here, which is fine. You can play it either way, but you're basing your buy decision based on this discount area of structure, okay? So that's gold. I'm bullish on gold. I'm looking for gold to go to the moon. Basically here, 1950 is my ultimate goal. I will be looking to play some gold trades here in terms of buy. So I'll be waiting for maybe further development on Monday. I won't take any trades today when the market open, but I'll be looking to get into some buying opportunity for gold, okay? So let's get into indices, and I'm gonna focus on S&P 500, and then I'm gonna do US 30. Okay, so this was an interesting structure, right? And we talked about how we saw price come all the way down here, and we were saying it would either come here and break, it would either come here and break, and it did exactly that. Here, that was one area, and this was the other area that I had called for it to go up, and it did, right? And then I talked about that I want to see it break above this structure just before we call it, we're back in bullish territory, okay? And it did exactly what I would like it to do. And it broke this structure and it went back up high already. Now, think about this. This is where it fell, right? This was the previous high of the S&P market before it took that much of a dump. And when I mean that much of a dump, I'm talking a good 24% drop in the market, right? Which is the kind of the average correction when it comes to the S&P 500, okay? So 25, 28, 30 would be extreme, but a major correction in the market is around 25%. Just did exactly that, okay? And here's what I'm talking about in terms of a major correction in the market, okay? The last time we had a major correction like that on the S&P 500, you can see this correctable market right here. This is back in February 20, when the pandemic for US was marked up. And this correction right here, that was a 34%. That was pretty huge. Look at this correction here, 20%. This correction right here, that was a nice 11%. And then we have, you can say that, call that a little bit correction, that was 10%. So on an average of 24% is typical average. And we're talking years and years and years of correction market historical record on an average of 24%, okay? Going back to the weekly, you can tell that all of this market was bearish, and then we are now bullish. Now, we had a great pullback on Friday. That doesn't mean we're bearish. We're bullish. It's just a lower low. You go back to the daily, you can tell that this is a bullish market, okay? This was a bearish market. This is now a bullish market. As you know, from a structure standpoint, once we broke this structure, that was a change of character. It did not come back. Went created a higher highs. This was the higher low, higher high. We're now coming back and retest that lower low, right? It came back up. It tried to break, but we're right back in this market. Now, could we be seeing the turnaround back to becoming bearish? Because it did break this structure here. And I would say that's correct, it did. And what we need to see is the next candle on the daily to see if this is going to be confirmed, you know, coming up with a lower high. And then if it comes back down, we could be seeing a lower low. Then I would say, yes, this could be back to seeing these levels revisit once again. Okay. I don't see that happening. And if it does, I could see maybe a retest of this. Now you got to think about gold and we got to think about dollar, right? For the indices market to come just low, that means the dollar will have to continue to rise. Now, I don't see it coming past that. If it does, like I said, the dollar could come up and it could break that high, but I don't see it coming back past this low, right? We would have to be in a really bad state of economy. And then we're going to see from non-farm payroll how far it goes. Now, could it come here and then eventually come back up? That's possible. But this is a demand area that it could come back. So let's throw the premium and discount zone on here. So we got this swing high, swing low, and we're going to go ahead and pull it up from here. There we go. So the market is right at the 50% level of this whole swing low and this swing high. It's right at that 50% level. And just like I called it right here, it is possible that it could come back because it's at 50%, right? This whole move here from this swing low to that swing high, it did come back to the 50% level. So the 50%, that's been checked. Could it bounce off of that and go back up? It could. Or it could hit this 618 level, 686, 786, or 886. Those are viable levels, okay? And then obviously we have a very strong order block level here that it could come back to mitigate. So this would be the next thing to watch in terms of the next couple of days. Will we see price come back up or create a little bit higher high, higher low, and then come back and create a lower low? I mean, a lower high and then a lower low. If that's the case, then we're going to be eyeballing 618, 786, and 886. Now, again, this is not a good time to buy. You could put a test here if you wanted to trade S&P 500. You wanted to try to test it if that's what you wanted to do. I prefer to scalp it, but if you wanted to swing trade it, you could put a test trade and then get ready to put some pending orders here at 618 or 786, and then 886 if it comes that low. But it's most likely 618 or 786 would be your target before I consider to do a buy on days, a day or swing trade if I wanted to do that. But the good thing is we got this break here. Let me go ahead and get rid of this market. We did get this break. We did get this break of structure. This market is looking bullish, right? And I'm hoping that this is what we're going to be coming back to, okay? So the market as a whole, from an indices market, the market, from all historical records of the market is more bullish 68 to 70% of the time than it is bearish. Okay, even in a bearish market, the market closes in a bullish close daily more frequently than it does bearish. Okay, And you got to think about it. The S&P 500, the whole stock market, is tied up to a lot of the S&Ps, 401ks and stuff like that. They're not going to let this market crash. But we just got to be aware of the ebbs and flow of the market and to be able to determine which way is this market going. Okay, as you can see, this is looking like we're getting that nice correction here. We're getting a nice little pullback here. We may see it play into this level and then come back up. Okay, so that's S&P 500. If you're looking to US 30, it's going to follow suit. It's not going to be anything different. It's doing the exact same thing, coming back, come up, and it really clear that 50% level nicely, right? Swing low, swing high, 50% level, looking at the 618, and it's possibly could be coming back to the 786, but 618 is a really good level. And then we could be, coming back up. But if it's not, if we do see a break of the 618, 786, 886, that's possible. I don't see the break of this without coming back to mitigate some of these positions. Okay, so that's US 30. All right, let me go into oil real quick and see what oil been doing. It's trading right now at $93, so we're getting a little bit of relief at the gas pump across the US, which is nice. So the market for oil has been very ranging, if you can see, right? It has not done much within a week. It's been ranging between 96 and as low as 86. But the good thing is, and I'm going to throw this right here. It did do a break of structure here from a trend line perspective, right here, right? But I don't see it breaking above this right here, which is, let's see, this is 104. We haven't seen oil break above $98 since August 1st. So since August 1st, it's been trading below $98, which is a nice relief, right? It's good to see that. What are the possible targets of where oil could be going? And here, let's paint that. This is where I can see oil as it's coming down. Like I said, it could come up, test around 100, and then play around this range all day long between 100 and as low as $76. But I don't see prices going below $76 anytime soon, and I don't see prices going above 100 anytime soon. So in other words, we could be seeing this all day long. Price go up, price come down, price go up, price go down. Okay, we can see that nice little ebb and flow of the market like we did here, right? This right here was a geopolitical situation with the Russia and Ukraine, and it came back to retest that. And now with all of the oil demand and everything else, it's just playing around this area, okay? This is the oil market here. If you look at it from let me pull it up on the weekly. These are very peak, and these are the low. This is $32. This is the nice range for oil between $100, which is really, really high when it comes to oil, and then a nice range here around $61, okay? So we could see oil come back there maybe sometime in the future, but as of right now, these two levels are very, very key here, just right here. So it's already at this level here. And this is the other level I see right here. $63 is the lowest I'll see oil But as of right now, if I was to trade oil, I would need to see here. Let me go back to the daily. I can see it coming back down. So I'm bearish on oil. However, higher highs, higher lows, higher highs, higher lows, it could come up and touch this before it's turned back down, only for the simple fact that we were oversold. So the right now, it's kind of hard to tell, but I would say I am neutral, and I would need to see oil come down a little bit more further if I was to scalp oil, which I'm going to stay out of oil for a little bit to trade other forex pairs, because oil right now is kind of playing dangerous in terms of where the market is at. It's at the bottom of its market here as it pulled back up, but I don't see oil again. If I see oil come up here around $100, I'll be looking to short it. I wouldn't be looking to buy oil until I see it around $87. But other than that, I don't see it going any lower than $62 and playing it within this range. Okay, so that's oil right now, playing it neutral. I need to see it go up closer to 100 on the other side, which was great, came close here at 96, or I need to see it come low before I even consider buying oil. But I am trading oil in the futures, but just scalping it on the futures side. Okay, so let's go into the regular pairs for, let's start with the USD pairs. Start with the weekly, and we can see that the dollar is back to parity again, or below parity. So $96, and it's been playing around, well, 99.6, and it's been playing around this level, right? And this is about as far as it's going to range all day long, right? Could it go lower than that? It could, but not more than that. We're talking probably another maybe 50 to 100 pips, 188 pips, if that. But we're looking at this is the bottom of the market, right? And it's been at the bottom of the market for a good, let's see, 1, 2, 3, 4, 5, 6, 7, 8 weeks already, 2 months. It's already been playing around this level. This market has been oversold. Euro USD is way undervalued. But until the market continues to, I would say, improve in the euro area, it's not so much of a dollar weakness, but more of the euro strength, right? Will we see euro up there ever? Will euro ever see 140, hell, even 107, 140, 119, 120? I'm sorry. This is 114 and 120. Will you see euro USD ever come to this level? The answer is yes. The question is when? And that's where everybody is who's trading euro USD. Obviously, it's the #1 currency, the most traded currency from a volume perspective, 80% of all global markets. Euro USD is way undervalued. And we all know that Euro USD is not going to keep going. Whoever's holding buy, it's going to be profitable in the end. It's just a matter of when, right? Because you can just see, I've been trying to scalp and trying to catch the bottom of this market here. It's almost seems like it's trying to catch a falling knife, but I'm loading up here to try to catch this market to get going. Now I'm going to be scalping Euro USD to try to see if I can speed up the process, right? So in other words, buy, get out. Every time it dips, reload, come up, get out, because that's what the market is doing right now, right? We go back to the daily. So this market right here is what I'm playing the range here. The top of this range here, you got 1.003, and you got this range right here. This is the range of the market that it's been going, it's been doing. So basically, you can literally buy now or wait till it drops a little bit, buy then, get up, get out. You can short it, or you can wait till it comes down in this area, in this range here, reload, get out, come back, get into this area, reload, right? This is that range that we're playing in right now. And it could go like this for about another 2 more weeks, maybe even another month. So what I'm looking to is buy, exit, take some of that, you know, cut some of the negative lot size equity, you know, and start, you know, washing out some of the negative trade, because you just sit here and it could just take longer than you expected. So it's time to start moving and start, you know, taking profits. Because I was hoping that I was getting a break out of here. I was going to ride that bad boy at least to this target, to be honest with you. Just what I was looking at. When I saw that, I was like, oh my God, this is great. But it came right back down. And that was like, oh, it was one of those, yay. Oh, but now when you're looking at it from a daily perspective, now we're in a range, okay? Up in a range. So that means now you can buy. It gets up here, you get out and put another pin in. I just automatically put another pin in right there at even 0.994 or even at 0.99, you know, even, and just ready to buy again. Get out, buy, get out, okay? This is where we're at right now, USD. Could it come down? It could. If you were scalping this, yeah, it could come down to as low as 0.99, but it's going to be within this range. This is what we're going to be looking at. We're in this range right now. Here, right here is that range. Buy, get out, buy, get out, buy, get out, right? Reload. That's all you can do, reload. We're in the bottom of the market. Go back to the weekly, look at. This is the historical price of USD. This is the top of the market. This is just the floor of the market. Should we load up and go crazy on sell? No. If you're scalping, sure. Other than that, buy, reload, because we are eventually going to see this. Right? Could this be, you know, up here? Could this be 2000, you know, 30? When USD come back up here? Sure. But we know it eventually will. This is the cylinder of the market. We're now at the bottom of the market since the inception of USD, since the inception of USD when it was adopted here in 2002, 2001. It went up and now it created the bottom of the market. Now let's come back up, right? It's way undervalued, way oversold, way overdue. And delete that, come back to the daily. This has been one frustrating market. Just want to come up, come back down. This was really good. This is a really good sign. This is the most I've seen from a bullish standpoint in a very long time. So this was really good to see from Euro USD. But when it came down and retest, I'm like, okay, oh well. This is, now we establish a range. Thank you. And now I know what the target is, which is right back to where we were at the previous weekly low. And now it's looking to come back up. Come back up. You can sell it and it could come back here. What typically happens is this in the range, right? It could do this. And then here, pull back a little bit and then shoot up. Okay. That would typically can happen. And that's what I was looking at. Could it happen here? Could it happen here? Either way, long term, You can't go wrong being bullish. Can't go wrong. If anyone says they're bullish on long term for Euro USD, you're in the right direction, right? And if you're in drawdown, hold it. If you hope you're trading small, hold it. Tell you that's money happening soon. If you got nothing else to do and you don't want to close out a lot, just hold it. Just hold it. Okay, pound USD, same difference. I'm gonna go up to the weekly. Look at this market. That's the cylinder of the market, the bottom of the market. Should we load up on sales and just keep selling? I don't think so, unless you're scalping, right? I don't think so at all. Are we ever going to see price? Well, price came up here at least. Well, I can tell you this: we are. All right, I'm not even going to ask that rhetorical question. We will be seeing price come back to normal range conditions. Right now, we're playing between this range and this range right now. As you can see right here, it went up. It didn't break that. Came back down. Great time to buy anywhere around here. Cover, exit. What do you think we should do now? Reload. Good time to buy. And I'm looking to buy right here. I'm bullish on pound USD long term. Okay. Let's go to the weekly. That was a weekly. Let me go to the daily real quick. And that was a frustrating drop, to be honest with you. When you see pound USD go to 122, previous weekly high, and it goes back up here again, and all of a sudden it just dropped. If you look at the 4-hour time frame, it created this, come back down, come back up, and then just totally just tanked. Now, if you're looking at this and you're saying, this is a sell, where's your head at? This is a 4-hour time frame. I don't see a sell anywhere in here. Now, could you say it can come down to this area? Okay, all right, that's possible, right? It's possible. If you were to buy it right here and it went down lower, you will hold that drawdown. Hopefully you don't, go big. Do not trade large, right? Trading large unless you have like a very strong conviction that this is what you should be doing, and you have 100% bona fide strategy that is guaranteed, then that's a different story. Other than that, trade small and hold it. Trade small and hold it. And the strategy allows you to trade small. It allows you to be wrong. But in extreme market conditions, it can go against you, right? And going against you means you just be holding the trade longer than you want to, right? In a normal market conditions, on a normal operating year, you're going to have a winning strategy. Some years, this year, it's been a very sucky months and weeks of holding because of the fact that we have an extreme levels of market conditions where geopolitically it's been range in the market, right? But this is a good time to buy. This is a good time to buy. And it comes up here, sell it. It's come back down, buy. Come back up, sell it. But overall, you should be bullish. You should be looking for buys on Euro USD and pound USD. Don't buy it at high, buy it when it comes to low. So we have an established support here. This is a resistance that will become future support, okay? So when it comes up here, wait for cut, get out, wait for it to come down here and buy. If it breaks, then that's great. And if you exit and it breaks, that's okay. It's not gonna go any higher than this. Come back down, it's gonna come back. This is a resistance, that's gonna be support. Let it break. You got out here, got out of your long chair, get out, get your money, let it break. It probably won't break as high as this. And if it goes higher than that, that's great. It's not going to keep going and keep going. And you fear of FOMO and you're buying the highs, let it go, let it come back and get ready to buy. Okay. This is a bullish market. I swear. Every time it drops, just like this is where you want to buy. I'm on a weekly time frame right here. This is a bullish market. I can't go any more conviction to do nothing but say you should buy right here. Daily, very strong area. Market's way oversold. This is going to be a very nice buy. It may pull down a little bit more to kind of retest this area, probably liquidate or kind of scare some other traders. But if anything else, you should be looking to buy. Look to buy. Unless you're scalping, look to buy and hold that. It's coming up here to 130, but at least will come here to 122 like it did. And then it's going to come back up here. Okay, you'll be fine. You'll be fine. Trade small, you'll be fine. Okay, odd USD and NCD USD, it's going to be the same. Market's been ranging a little bit, coming up, coming down, coming up, coming down. It almost broke this structure here, came down, but I can see this looking good. Right? It may come down here, but I doubt it. But if it does, we're going to be looking like this soon. That's what we're looking for. This is on a daily. Okay. Will the market see these extreme levels down here? I don't see that happening with odd USD. Okay. So with odd USD, you may want to take a small buy here or wait and see if it comes down to the previous monthly low. Okay. This is the previous monthly low here, 6.668 on odd USD. Odd USD right now is at a previous daily low. This is a previous weekly low. If it doesn't break this, and if it bounce back up, look for buy. If it does break this previous week low of 0.6859, it comes down here, put your buy right here. This is where you want to buy. And then it's going to go. Okay. So if I was to place an order, which I'm not, on odd USD, you can do a test trade now, or put your standard position here at 0.68. Anywhere in this area right here, you can be safe. And what I mean by anywhere between 0.67 or 0.66. 0.67, 0.666, you can put a buy there. If you don't want to put a trust trade, put a buy limit here. And then I doubt if it could dip this low, but if it does, it could come maybe 0.65. If that, I doubt it. But other than that, this market will be coming back. We will be seeing 0.76 and higher. We will be seeing that. Okay, let's go to NCD USD. I loved it when it came back up here. I thought it was going to go for 0.69. It will, but it did retrace, and that's because of the dollar strength. It did come back. This would be the same for odd USD. Okay, if odd USD come to the previous monthly low, I would buy here 0.6060. This would be a good place to buy 0.6060. This would be a good place to buy. If price breaks lower than that, then I would place another buy in this area right here. So if it breaks just low and it comes back maybe another 138 pips at 0.59, then place another buy. These would be the two areas that I would want to buy for NCD USD. Right here, 0.6060, and then the other one would be what did I say? 0.59. Those would be the two areas for NCD USD for buys. In terms of targets, we are definitely going to be seeing these bullish markets. And the second half of this year, I'm really looking forward, because I almost thought it was going to break here, but I'm really looking forward to seeing NCD USD coming back up to 0.644, and then eventually 0.65, and then coming back up here to 0.69 by year end for sure, or within the next couple of months. really, really good in terms of seeing NCD, USD, and RGUSD. I remain bullish, meaning every time it comes back down in the buying territory, it's time to go long. It's a good area to buy. Don't buy the highs, buy the lows. It goes up, get out. It comes back down, buy again. Okay, reload. Okay, so that's it for the USD as the quote currency. Let's go to USD as the base currency, starting with, we'll go to USD chef, and then USD CAD, and then we'll go to the yen. Okay, let's start with USD chef. And oh man, this worked out beautifully, exactly what I thought USD chef was going to do. And I love that. I love it when a plan comes together. Okay, so this right here is where I say USD chef was going to go. And it came down, and I'm out of all USD chef, and I'm hoping everyone else did. Obviously, there was some trades that was open, and I told people go ahead and just manually close it because we were there, and now it's back up. That's all right, because it's going to come back down. You can see where it's in this channel here. There is a great possibility that we could see USD chef could drop to 0.921. That is a possibility, but we have to see what it does here. This is a good place to short USD chef. If you wanted to get into the trade, this is a good place to short. If not, another good place to short is at the previous monthly high at 0.98. Okay, this is a good place to go short. Now, that means obviously USD weakening. We could see prices go lower. Let's go to the highly time frame. Let's look at it from a weekly perspective. Okay, you can see where the market, the top of the market here, was way up here. You can see the bottom of the market here. Let me see if I can get a different price quote. Let me see, USD chef. Let's look at from a Saxo Bank. Saxo Bank has more price data. Whew. USD chef is way higher market, and we're playing down here. Look at that. This is the bottom of the market, and we've been in this little range down here since 2011. That's how low USD chef has been playing. This is a really small range in market for 2011 to now 2022. It's been ranging, and US Swiss francs is a range in market, but this is the longest range I've seen in this market. Like you can see, been a real nice ebb and flow there, but it's been, you know, ranging here. Do I believe USD chef? Sure, sometime in the future, absolutely. Not anytime soon, right? So let's go back to the daily, and we've been in this range right here, and we've been in the bottom of this range there, and I'll even go as far as here. Okay. We haven't touched the top of that range, but we're, you know, with the USD weakness, I do expect it to come down here sometime in the future at 0.92. But like I said, right now, if price goes up to 9.8, I would sell it. If price goes up here to 1.006, it'd be a good time to sell as well. But as far as right now, this is a good place to do a test trade if you want to, or wait till it comes up here to give you a nice double top. But if you can see, it's kind of doing this nice channel here. It went up to an equal high, didn't make it up past the 50% level. It finally broke this level here. Could we be seeing this before we come back up? I wouldn't buy unless I see it come back down to this level again. And I would be selling it if it comes back up to this level here, right? So that would be a good place to sell. And this would be a good area to buy. You can do a trust trade right here, but anything in this area right in between here, it's really dangerous to see because we're not at an extreme edge level. This is not quite overbought, and probably until we get into this level. It was in really nice oversold conditions, and it could come back down to give me a nice better or another opportunity for buy, but I wouldn't buy until I get right there. Other than that, you can probably stay out of USD stuff until you get more extreme level condition. Let's go to USD CAD. USD CAD has been in a range of market as well. I see USD CAD still coming down a little bit lower. This is, go to the weekly. You can see where it's been on this ascending, basically trajectory going to an uptrend. If you go back down to, because right now the market is on the upside of the market, it needs to come back down. You go to the daily, it has not broken this high of 1.32, and I see the market coming down. I still see it coming all the way back down to 1.25 before we consider buying the market. Okay, right now I'm bearish on USD CAD, so every time USD CAD peaks, I would sell it. Okay, so like right now, every time it peaks, well, we're almost there. This would be a good time to sell. Anytime over here, this would be very good time to sell. And I see the market coming down to this level, even to this level. And if it comes down to this level, that would be a good time to buy. Anywhere in here, that would be a good time to buy. But right now, this is a bearish looking USD CAD. And right now it looks bullish, right? Because the dollar is strong. Now, could it come up a little bit higher? It could, but this would be a good time to do a test trade, sell here, and then put another one right here. Okay, in this area, this is a good swing low right here. Oop. We're in a premium, right? Swing low, swing high. We're in the premium area. This is a good premium. This is a good area to short it. Okay. In the premium area right here, we just passed 8.886. We could get into a little bit of extreme level. It's coming back to the 100% of the pullback. It went to the 50% pull up. Like I said, right now to get area to look for sells. If not, you can put another one way up here or somewhere here and another one up here. But this is a good time to short USD CAD. Okay, let me go to USD JPY. Yes, USD JPY. Look at USD JPY. Go to the swing of the market here. This is on a weekly, and it's the peak of the market. Okay, this is on a weekly. Now, here's what I tell people. We have not even touched our target of 50%. Okay, we have not. Now, we've touched the peak of the swing high of that, which is the June 15th. We touched a little bit on that, but we haven't come close to the 50%. This is where I'm seeing that market come, and it could even come even lower as that. Okay, but me, I still got my eye on the price for USD JPY for 121, and I do see it coming back down that low. Okay, so if everyone was asking me, I'm still bearish on USD JPY. I don't see this going any higher Let me pull up the market here with Saxo Bank. It's been having a hard time trying to get up here to 147. And if you go to the weekly, it's having a hard time breaking this previous weekly high of 139. Right. So 1, 2, 3, 4, 5, 6 weeks we've been in this range here. We have not broken a high, and we have not broken this low here. So this is that range that's playing in right now. So if you were to look at USD/JPY and say, okay, what is going on? We're in this range here. Okay. We're looking for a breakout of 139, or we're looking for a breakout of 132. Technical tells me we're going to be breaking out of 132. Okay. It doesn't have any room to go higher than 139 or any reason for it to go high for 139. If you look at the futures of the yen cross, let me go to yen. This market, the yen, look at the value of the yen futures of the currency. Historical low. This is very historical low for the yen currency. And obviously it can't stay low that long and forever. Obviously it's hurting the currency, and it's also hurting the economy of the Japan. So I do expect it to come back up to normal range anytime soon. What we don't want to do is thinking that it's going to go long and then come to find out we were bearish the whole time. USD/JPY is a bearish currency. Okay. Yes, just pull back. It did come back down. Yes, it went back up, but it didn't even cover this little imbalance here, right? It didn't even cover that. It's coming down, and it's going to go down further. And when it breaks this and it goes down a bit further, that's going to be one correctable market. This market has been very, very bullish all year long, and it's only not because of the dollar currency strength as much as it is for the Japanese weakness. Okay, so USD/JPY, I would say every time it comes up here, you short that bad boy every single time. It comes back down to 132, go ahead and sell it, right? It's okay to sell it. If it comes down here, it's going to come back up, short it again. Okay, so that's USD/JPY. Let's go into the other yen crosses. That's USD/JPY. Let's go to EJ real quick. EJ is bearish to me. Okay, I'm still bearish on EJ. It's having a hard time breaking this 142, which it hasn't. Previous high 142, it came down. This is that break right here, and I do see it coming all the way back down. Now, obviously, with the euro weakness, it's been kind of ranging, but this is going to be more about the Japanese strength than it is with the euro weakness. Okay, even if euro is kind of weak, even if euro is kind of strong to push up euro USD, that euro USD is going to be more about the dollar weakness than it is about the euro strength. And this one is going to be more about the Japanese currency strength than it is about the euro weakness. This market is way overbought, and target right here of 124 or even as low as 117 is coming. So if anything, I'm bearish. This is looking at a weekly right here. You can just see we're up on the upper range of the demand. Okay, this is buy zone. This is sell zone. Nothing but sell zone right here. You get anything in this market over here, that is definitely a sell. You get anything in this market down here, come on guys, that's a low, that's a buy. You get anything around here, that's a buy. And in between, we're in that range. Okay. In fact, I'll tighten it up even a little bit right here. Anything in this range is a buy. Anything in this range you see up here, it's a sell. Anything in that area. You get in this market, you day swing in this is a sell. You get anything down here, that's a buy. Okay. Now it may seem like you're going to go down in a drawdown longer than you need to. When it gets here and you start to buy, and it looks like it gets here, you're still, this is buy. It's nothing but buy territory. Anything over here is nothing but sell territories. Anything outside of this is extreme. Okay, so think about it that way. If you were to break down this market structure, this is on a weekly time frame. This is that zone. This is that sell zone. This is that buy zone. This is more of extreme. This is an extreme level. Okay. Now, right now it's in between, meaning it could come back. It could come back up because it came down and it's having a hard time breaking that structure. So if you wanted to, you can put a sell stop. Let me go to the daily. You could put a sell stop at the previous weekly low of 134. If you wanted to play conservative and say, okay, you know what, I don't want to sell unless I get a 134. Or you can put a buy limit way up here, 142. Okay, so it's not technically in a very nice buy area when you go into a daily time frame. When you break it down, this is kind of the lower end, right? This is not a good place to where you want to sell. This is more like a buy area. This is a really good sell area, right? Unless it breaks this, then it's coming back down. If not, let it go, let it come back up here, let it retest. In other words, let it break this structure, come around here, come back up, and show you that it's having a hard time breaking this to sell it again. Here's what I mean. If you were to put the swing high and you were to break this structure here, the swing high here, the swing low here, and you put the fib from here to here, it only went as far as 50%. Okay, meaning this is not a really good area to where you want to buy or sell, right? You want it to get in this area right here. This is buy, this is sell, sorry. This is sell territory. This is on a daily time frame. So in other words, will you sell it right here? No, but I'm bearish, meaning I'd be looking for an opportunity to sell. Okay, price would need to come up here for me to sell. If it breaks out this way, you could, basically put a sell stop and break it. But you know what? You're just scalping it at that time because it is definitely an opportunity for it to come back before it breaks back down. Okay, but if it breaks this way, it can come back up, and then you'll be playing this swing right here. So this swing high and then another swing low. Wait for another swing low and put the fib and see where it comes in back to a premium for you to sell. But as of right now, this is in a discount area. The structure, this is not a good place to do anything, buy and sell. You can see where it's ranging right here, right? You're looking for either to come up here and sell or break out to the low, come back up, create a swing high, create a swing low, and then you wait until it gets into another premium area of the structure. Because if it breaks this structure right here, then it's going to create another swing high, swing low, and then this would be your new structure. Okay, so this is for EJ, and it's basically going to be almost the same thing for GJ. Go to the weekly. Anything in this area right here, this is sell territory. And anything in this area is buy territory. So we're at the peak of the sell territory when it comes to the weekly chart. Okay, let's go down to the daily. And right now, this market is ranging, right? This is still not a good area to where you want to buy or sell. If you wanted to sell, you missed that opportunity when it was up here. This was sell territory, right? Buy territory, it's not even buy territory until it gets right here. Swing high, swing low, swing high, equal highs. You didn't have to create an equal low yet. So if you were to throw the fib there from this swing to that swing, look where it's at. This is an area to where you want to buy. And this is the area where you want to sell. Anything in this area is what you want to sell. Anything in this area you would want to buy. Now, overall market, overall on the sell, overall on the weekly, I'm bearish, right? Because this is what I talked about right here. Anything in this area you want to buy. Anything in this area right here. Ooh, I don't even go as low as this right here. Anything in this area you want to buy. This is all sell. This is all buy. And right now we're right in the middle. So it needs to either come back a little bit lower and then come back up to sell, or wait till it comes back up. Go back, this is the weekly, let me go back to the daily. This is GJ. Not a good area to do anything right now unless it pulls back, okay? If it breaks out, still don't chase it unless you're scalping it. If you want to put a sell stop there, that's fine. But wait till it to come here or come here and then pull back, right? Because then this would be a swing high and then create a swing low, let it come back up, create another box, and then you'll be looking like, let's say price does this. Wait for it to come back up in this area and then sell it again, okay? Because overall time frame on a weekly, we already established that it's definitely bearish market. Chef J. So look on the weekly. What do you guys think? This is a weekly. This is the highest. So I'm gonna pull up a Saxo Bank to kind of give it more of a data. This is Swiss franc JPY, Chef JPY. Just a bullish looking market to start buying now, or a bearish looking market to start selling, start looking for sales. Bearish all day long. That means, right? When I say bearish, that doesn't mean you just automatically sell. That means we should be looking for an opportunity to sell every time it does what? Every time it rocks to the top. Okay. Every time it rocks to the top. This is on a daily. Okay. So that means every time it came back up, you sell, you sell, you sell. Should we sell? Absolutely. You can sell right here. You can sell right here. You can sell right here. Okay. Could it keep going up? I don't think so. We just established that. Look at the market historically. Look, I'm gonna pull up the monthly. This is the history of Swiss francs. This is definitely the peak of the market. History. This is historical. This is the ceiling of the market. This is all kinds of supply here to sell down. This is the peak. This is the mother of all setup. I kind of like that because when I'm looking at it, it gets me excited to go, man, I'm doing great in terms of being in the sell market. Now, I probably went into a sell longer than I should have because it kind of pushed it to an extreme level, but I'm in an extreme situation where I'm staying and holding my shorts, right, on Swiss francs. This is great. This is a great time to sell. Great time to sell. This is the target. This is monthly. Okay, let's kind of go to the daily. Swiss francs is at an ultimate bearish looking market. Now, it's in its range, of course. It's in its range. But it hasn't breaking that high, hasn't breaking that high, and hasn't breaking that high. And it looked like it's trying to come back up, but you're better off. If you're already in a high here and you didn't cash out, this is another opportunity to buy, or I mean, another opportunity to sell, another opportunity to sell there because it's coming. And guess what? This break is coming. It will break. This break of structure will come. This target will come to a theater near you. Okay. You have a sell limit at 142. That is awesome. That is an awesome place to either sell now or even at 142.7. This is great. And if it comes down here, this is what I would say. If it comes down to 138, just cash out. Go ahead and cash out. If it breaks, that's fine. Guess what? When it comes back up, reload. Okay. This is going to probably be the highest we're going to see Swiss francs probably for another 5 years. Think about that. This is the last time we're going to see Swiss francs for another 5 years. That tells you this is going to be a nice, long, bearish market, okay, for Swiss francs. Look at that. We are going to be seeing some historical lows for the next 5 years. Okay. You could sell here and tell you what, don't even come back to Christmas and just cash it if you wanted to, right? You might see it go up and down, up and down. It may come down here, probably by Christmas, but you can literally put a nice little trade there and basically walk away. It's like if you were a professional pro basketball player at a half point, at a 3-point line, not a half shot, half court shot would be kind of gambling, but at a 3-point line, you can literally just throw it up. And because you know it's going to go in, you can just walk away and just take point. It's going to happen, right? Because this is such a great setup on CFTC. Again, I'm looking on the daily, and it's been ranging. It has not breaking that. A lot of people say, well, could it come up here? It could. It actually could. I'm not even going to say that it can never happen. This area, even if it is, this is still all supply. I would sell, 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 and I would hold that for dear life. I swear. But this is a good area to sell, good area to sell, good area to sell. Market is definitely overbought in a higher time frame, and we haven't even. Let me put it in more realistic terms. Let me go ahead and say, okay, let's go with this swing low to that swing high. That swing low to that swing high, we haven't even reached 50%. Okay, it's coming. This is a very strong area of reaction, price reaction, right here. So it's coming. There's a very nice order block in that area as well. You guys can see that. Very nice order block here. Price for 134. This is a very short market, Swiss francs. This is a good place to sell. I'm doing nothing but just holding right here. That's great. It's just a matter of when, not a matter of what. That's a matter of when. This is a good place to short. Okay. Another one. Let's go to CAD JPY. Obviously, we've been holding CAD JPY for quite some time. You know, longer than we would like to. Yeah. True. But this is a good place to short. It's not a good time to buy. Let's go to the higher time frame. Let's go to the weekly. Historical price. Let me see if I can get a better history of Saxo Bank. Look at that. This is the extreme top of the market. And this is on a weekly. This is back in 07. And this is the bottom of the market. All right. And you guys already know from an equilibrium standpoint, from our training, look at that. Right. Remember what I said, in our training when we're looking at the ebb and flow of the market. When you know the equilibrium of the market like this, the first thing we have to figure out is where are we? Where are we on this? Because if we're here, right here, if we're here, then we know that we can play this. If we're here, then we know we can trade here. If we're here or somewhere here, right, then we know the direction, right? Because that's only the two things you need to know. Direction and timing. If you have direction and timing, every time you'd be the most rich, profitable trader ever. But this is the secret. We never know the timing, but at least we can get the direction. And if we get the direction, then we only need to have timing on our side. And sometimes timing requires patience. That's it, right? But it's going to be very profitable. It's going to pay out. It is going to pay out. It's not a matter of if, it's just a matter of when. Okay. So let me go ahead and go back to the flow of the market, because this is a prime example of that, that equilibrium part of the market. And now we'll bring back the chart. Look at that. Are we at the top or at the bottom of this historical market since, what we have here, 96? This is the ebb and flow of the Canadian Japanese yen. Are we at the top or at the bottom? We're at the top. So if you're at the top, you should be looking to be bearish. You should be looking for sells. You should be looking to buy a sell and just hold that bad boy. As stubborn as it may be, as bullish it may look like it wants to be, this is going to be a nice drop. Okay. How about 3,000 pips? Is that okay? I think that's great. Is it going to happen? Yes. When? I don't know. But I just know it will, right? It will come. So let's go down and zoom in a little bit more on this. Let's go to the daily. All right. So we're at the historical price level here of 2014, of 2008. And I'm not sure exactly what happened in this area. Obviously, this is extreme level of the market, right? Very, very extreme level. Hasn't happened ever since 07. So I would say that would be an anomaly. So if you were to, let me see. If you were to block that out and say, okay, this was an anomaly. Where's the majority of the price? All right, you can see that right here. And that's where we're at. We're at the extreme level of the market. Yep, we're at the extreme level of the market from a higher time perspective. And we're just waiting for it to go in our favor. Okay, so let's put this on the swing high, swing low of the market. And let's take this swing. We'll take this swing. Well, I won't go this low. Let's take this swing from here. We'll play it out. 50% level, we're looking at 96, 2. From where it's at right now, we're looking at a nice 900 pip. Okay, nice 900 pip. You put $1 and you'd be looking at a $900 trade. If you put a 0.10 mini, I don't think anyone can afford a 0.10 mini, even if you had a $1,000 account. You can put a 0.10 mini right now. Go ahead, open up your chart, put a 0.10, not a standard, not a micro, put a 0.10 here, and then come back around Christmas. If that, I don't even think it'll probably take that long, but you're looking at a $900 collection on one trade, on a single trade. Not a bad deal. I'll take that all day long. Now, do I think it's going to go lower? Oh yeah, we're looking at, like I said, $3,000, 3,000 pips come down here. That's $3,000 on a single trade. I don't think that's going to happen within this year, but I definitely think it would happen in the next year, right? This would be extreme, but $900, very, very realistically on a mini. Put a standard, you're looking at $9,000. A single trade. Just 50% of this move right here. We're just talking about from this swing high, the swing low in a very extreme market. Look at this very volatile move. We're going to see it come down, which is great. So I'm excited about that. I'm not excited that it did come back up. I was hoping that it would break the structure, but from a structural standpoint, this is looking really, really good. Okay, so right now it's a perfect time to sell. It did pull back, right? So I think I got a pin and sell right here. Absolutely. I think I got a sell. Got several sells, like from here. Got sells here. Okay, and I got a pin and sell right here. My break even for this trade is about, I want to say about right here. That's my break even point right there. Right. And we're saying it's going to come this low. That's the exciting part, right? We're saying it's going to come lower than that. I mean, all of this is going to be profitable. But if I want to just get out and it comes down, it could come down within the next week or 2 or 3. It can come down this far, and I'll be down and be maybe slightly net profitable, even with the swap fee. But if I wanted to hold and say, you know what, I'm really, really stubborn, I want this thing to pay out, then I just need to be, hold it longer, right? Or that's one option. Either take it and go net profitable. 2, go and wait longer to be totally profitable. That could be a little pain in the ass because we've been holding it for this long. Or every time it comes down, it could, because you never know, right? The market could do this. And this would be obviously horrible before it drops. Will it drop? The answer is absolutely unequivocally yes. It's going to drop at extreme level. Will it range? This is a high probability. And that will take time, right? So with that being said, and holding it as long as I did, this is what I plan to do. Sell, exit, right? And I may exit and just take it out and just get a net out of all of this. Hopefully it comes to the break-even point and just close all of it. Just get out of it. Then we've been holding it for too long. And then look for an opportunity to sell again, right? And then catch the rest of this move or catch the rest of this move. Just get out of this one for now, and then come back and reset, sell, sell, or sell, and just get ready for a nice bearish market for the next 6 months, okay? So that is the goal, to go ahead and get out of it because we've been holding it pretty long. Like I said, it could come down here and then come back up and do this. And it can go in this range for a while. And then come back down and do this range for a while. All that is possible. That is just one stubborn. But what you can do is in your mind, for CAD JPY, because we have this historical extreme level move, is to stay bearish. Stay bearish. Meaning every time it pops, you short it. Okay? It pops, short it. Make sure you catch the range, you catch the structure. This is a structure, or the trading range. If it goes into another trading range, catch the range of that trading range and short the tops until it breaks out of this range. Okay, I'm kind of giving you guys a kind of a heads up, right? So this is the trading range. We short the top of this range. It breaks out and it gives you another trading range. Short the top of that range. It breaks out and it goes into another range, then I would say short it again. Now, could it come up and put you in another drawdown? True, but the likelihood of us seeing this extreme market conditions of this peak probably won't happen for about another 5 years, okay? All right, let me zoom out again just to kind of give you guys a really good bird's eye view again. This is bearish all the way until I see it come down here. When it comes down to this level of 8.85, is when I would even consider start looking for buys. Okay, right here, all this is selling territory. All of this is buying territory. Okay, demand. So if you're looking to this is a really good example. This is where you want to short the market, higher time frame. This is where you want to buy the market. Okay. So and then when it's in between, right? So look at this. Came down this direction and went up for this direction. That means you're looking for sales, looking for buys, looking for sales, looking for buys, looking for sales, looking for looking for sales here, looking for buys here. Let me put that again. Looking for sales here coming down. And then when it comes down here, you're looking for buy. You're looking for selling opportunity down here. The market goes up, you're looking for buys. Keep buying, 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 buying until it gets up here. Looking for sell, sell, sell. Every time it pulls back, sells, pulls back, sell. Every time it drops, buys. Every time it pulls back, sell. Okay, because it's going to do this. Sell, sell, sell. Now you're starting to be in this range here a little bit. Now start looking for buys, 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 buy. Oh, we're in the top of the range again. Sell, 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 sell. Type one in the chat. That kind of makes sense to everyone. Just want to make sure that kind of this is CAD JPY. What we're looking at. We're currently in this market. We're looking for sales, and we're looking to really start rocking with this one. Okay, awesome. Thank you. All right, so that's CAD JPY. I think I covered all of the JPY. It's up a couple more, right? So let's look at NCD JPY. This is on a weekly. Again, what do you guys think? Let me draw this. I just gave you a really good example. What do you think we're at now? Should be looking for sales. Okay. This is on a weekly time frame. You should be looking for sales. And you guys already know from the training how to look for sales when looking to all of the other confluence, right? You're looking at the swing high, swing low. You're looking for market structure, breakup structure. You're looking for every opportunity to pull back into your premium. You're looking for just stochastics or MACD or RSI, whatever you're looking at. And you're looking for imbalances, retests for sell. This is all we're looking for. Sell, sell, sell. And every time you're looking for sell, you got to look at those list of confluence that we talked about. What makes it look like a sell for an opportunity, right? The market's coming down. You're not going to buy it. You're not going to sell it here. You're going to wait till it gets into a premium, imbalances, stochastics, everything else before you start to sell it. Okay. So bearish market on New Zealand. Let's go down to the daily time frame. Look at this tight range that it's in. You see that? Look at this was all opportunities for sell. All opportunities. Sell, 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 sell. This would be great opportunities right here to get out. Cash out, cash out, cash out. Is it going to break? Absolutely. It's going to break. It's going to break, and then it's going to get into this range. Okay. This is a trading range right now. This is a trading range right now. On a daily, you zoom out, weekly, overall. We're in that sell range. It comes all the way back down. Sell, 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 sell. Buy, 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 buy. Long term. Okay. All right. Let's look to RJPY. What do you guys think? What do you think? Where are we at? Right here? Yeah. Bearish market. So this is the quickest way to be able to share with you guys how to look at it to see if it's a bearish market or a bullish market, right? Or a bullish or bearish opportunity. So this is AJ pulled up on a weekly time frame or a monthly. It's easy to see. Okay, then you go down and now you go to the daily time frame. And you go to the 4-hour time frame to really get your timing right. Okay. And you can start to point out and look at your trading range. This is our trading range right here. We already say on a higher time frame, we are bearish. So that means we should be looking for sells, right? That was a sell, that was a sell, that was a sell. What do you think we're at right here? It's looking good, right? Get out, get out, get out, get out, because we're in this trading range. This is our trading range, right? So we should be selling here. If it comes up, sell. If it comes up, sell. We're already saying it's sell. You should be doing nothing looking but sell. Obviously, you don't want to make it too tight. You want to space it out, right? Our average daily range, we talked about, that's in the training, right? We're looking to sell that bad boy just right here. It breaks out. You sell right here and it breaks out. So what? It's not going to go far. It's like a bull on a range. It's not going to go far. It's going to come back, right? It's going to come back. When it comes back, then you're going to short it again. What if it goes up? Short it again. What if it goes up? Short it again. Who cares? We're on a higher time frame, weekly and monthly. We're traders. We've already seen it. A lot of people who's not even looking at this wouldn't be able to know exactly what we're doing right here. They're looking at a 15-minute time frame. Of course, you're going to get lost. This is a short market. You short that bad boy. Right? If you didn't get out right here, I didn't get out, I held it, pulled me back and put me back into a little bit of a drawdown again. All right, that's fine. I should have got out. Was waiting for it to break out. All right, I was actually, I was out that day with the family on vacation last week, so apologize, right? But I tell you what, it comes back this time, oh, I'm getting out this time, right? Because they pulled me back and I'm like, oh, geez. It comes back down this time, I'm getting out. I'm gonna get out. I'm gonna take this money. Let me get out. Take that money, get out, pocket, put it into your account balance. If it pulls back, short it again. Come back, put more money to your account balance, build up your account balance, right? And if you were in sell down here, you can use these account balances, cash flows we talked about to go ahead and start washing out some of these these lot sizes. You can make it down to 0.09. We talked about knock it down to 0.08 because you build up your account balance. You put some cash flow in your account balance to break this up, right? I missed that opportunity last week. I was on vacation. I'm like, oh, geez, that would have been a great opportunity. Like last time I saw it, it was dropping. I was like, oh my God, this is great. Before you know it, it came back 2 days. I was like, oh my gosh. Oh well. All right, guys, this is going good. Bearish, hard USD, NCD USD is going to be the same thing, pretty much follow suit. I just went over that. Everything else in terms of Euro CAD, Pound CAD, I'll let you guys tell me. I'm gonna go ahead and pull it up on a weekly. But I pointed out right away, oh yeah, I think this is a good time to buy. Absolutely. This is this look right here. I'm gonna tell you, you buy right here. 3,000 pips over time. That's if you put one trade. You're better off buying, not selling. Right here, all this, that is a buy territory. Higher time frame. Anything over here, please sell. Don't buy. Don't just do me. Promise me you won't sell it when I get this up here. We're looking to buy. We're looking to sell up here. Down here, we're looking to buy. Yeah, but I'm already in the downtrend. Okay, hold it. Market continues to pull down here. It's going to come back up. We know that from a currency standpoint. We know that from an equilibrium theory. This is a very efficient market. Sometimes it's just stubborn. Sometimes it holds here for a few months. Okay, I get that. Look at this. This probably was for 6 months. Did it drop? Absolutely. It's down there here for about 6 months. Guess what? Did it go up? Absolutely. It's down here for about maybe 2 to 3, maybe even 6 months. But is it going to go up? Absolutely. Okay. So I'll be looking for that. Let me see. I'm pull up on a daily. I'm looking for CAD, CAD JPY, obviously CAD weakness, Euro CAD. I'll be looking to buy, put more Euro CAD. I don't see Euro CAD going any lower than what it already has. It's already been very, very bearish for the most part. In a shorter time frame, if you were to look, it's way oversold, and it already closed bullish. Okay, closed bullish, looking good, but I tell you what, this right here is in that trading range. So every time it drops in this market right here, anytime it drops right here, you want to buy. Gets up here, sell or get out. It drops below and it hits this range again, buy, 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 buy. Get out, get out, get out until it does what? Until it breaks out. Okay. This is that trading range here. You can see it. This is that next area. This is that trading range. I'm trying to break it down for you guys to really dissect it at an easier level to understand. This is that range. What do we do here? What we buy? Why are we buying? Because the higher time frame tells us that this is an overall bullish market to buy. Okay, not a bearish downtrend, right? We're not looking at a micro level from a macro level to determine what should be looking for at a micro level. On a macro level, higher time frame, this is a bullish opportunity. Okay, so every time it dips, we're looking for a buy. Okay, we should be buying now. Look to get up here, short it. If it breaks out and get into this range, it comes back down, buy it, come back up here, buy it, come back down, buy it, buy, buy, buy until it does what? Until it breaks out again. Now, if it breaks down and it gets into a downtrend again, you just hold on to it, buy, get back up. We're in a bullish market, all because the higher time frame tells us on a weekly, on a monthly, Come on. Not telling me we're going to see EuroCAD not come back to 1.49 eventually? Absolutely. We're even going to see 1.55. You guys stick with me long enough, I see you guys maybe next year or two, we'll talk about it. It's coming. All right. Same thing with pound CAD. Let me show you guys. Let's look at pound CAD. It's still on the weekly. Let me go. You guys already see it already, right? Ooh. You guys tell me. Oh my gosh, we should be looking for nothing but buys, right? This is historical, so way back in '89. Will we see prices come up here? Absolutely we will, but right now, this is at the bottom of the market, okay? Let me go ahead and go down to a lower time frame. Let's go to the daily. We're in this nice range. CAD, all pairs is not, it's not a, let me put it this way. Not all pairs looks nice and pretty. I get it. Not all of them looks as, congruent like that and nice and easy and symmetrical. Not all of them, right? Some of them looks kind of crazy like this. Right, I get it, but we still have an equilibrium. Okay, GPP CAD looks like this one. Right, this one here, GCAD. So this is GCAD. Looks like this type of market where it comes up and it ranges up here for a little bit and then comes all the way down and it ranges like this for a little bit. Okay. So we have to trade this a little bit different, and this will be considered the trading range. This would be considered a trading range in this whole overall range. Okay. That's what we're looking at right now. Let's go back to the weekly. All right. That means it's going to eventually come here and then come back down, may come back like that. It may look like that, okay? That is eventually, however, we have a top. We do always have a top ceiling and a floor of the market. Okay, go back down to the daily. We know we're at the bottom of the market. We all know that, we all see it. We all know that this is a bearish market with a lot of imbalances here. Do I see this market coming back up to 1.57? Yes, we do. And this is what I'm saying. This is what we should be looking for. You buy, you get out, you buy anything in this area. Let me put that out there. Anything in this area, you sell. Anything in this area, you buy. Okay, this is what we're looking. And this is this trading range here. Okay, anytime it comes here, you buy. Okay, eventually we're going to see the market do this. Okay, that means we get up here, you get out, you buy. Get up here, you get out, you buy. Or even if you get out right here and you see the market get up here, don't do anything because you already sold it. Wait till it pull back, you buy. It'll get to a little bit lower, okay, buy again. Oh, okay, and then comes back up, sell, and it breaks out, that's fine. Comes back up, buy it, and then you get a nice, you're gonna get a nice, every now and then you may get a nice breakout to where it's so strong that you just trail it. Remember, we just trail it. You just don't automatically get out and put a TP. You can just trail it. Just trail it and let price take you out, right? You guys already know that. We talked about how many how many ways to get out of a trade. We talked about that. Okay, that's Euro CAD, pound CAD. Let's look at Euro odd and pound odd. Let's go back to, and go to a higher time frame. Look at that. What's up here, come down. Was down here for a little bit, came way up here. We're back down here now, right? So here is our area, a buying area. This is our selling area. Yep, like GJ, right? So this is an area where you want to buy, okay? It goes a little bit lower. Buy again, buy again, buy again. Small position, okay? So it's in this area right now. This is the next area to buy. If you didn't get into a trade here, if you didn't buy, you can put a test trade here. If not, put another one here, or put one here, because it could come down. But as of right now, looking like it's oversold, and it looking like it might be tapped out around this area. So to me, obviously on a higher time frame, I'm looking bullish. I'm looking for this to happen. Okay, so let's put it this way. The price for 1.62 on Euro odd, it's coming, right? Could it dip a little bit low before it comes back up? That's sure, but we will see 1.63. We would definitely see 1.52 again. We just saw it last week. It's going to come back. Will it dip a little bit lower? It could. It could, as we play this out with Euro odd and odd strength and so forth. If odd strength pushed down, that's fine. If Euro is that weak, but we will be looking for a bounce back from the overall market. It is bullish in this area, just the area to buy. Okay, go to pound CAD, pound odd, pound odd, pound odd. Maybe a little bit lower for me. You guys can see that. This is on a weekly, right? So when I start to do it this way, you guys will start to be able to see it. So way up here is the sell of the market. Way down here is the bottom of the market. And we're almost quite, and you can see where the order block is for this weekly chart is at. And go down to the daily. And there are some opportunities for this market to go down a little bit lower to that area. And all this area right here. All this is possible. Okay. So it came down here and it broke out of here. So pound odd is pulling up a little bit, but I see this dropping a little bit more. But overall, it's kind of a neutral area. It's kind of hard to say it's going to bounce back up because it's creating a higher highs, higher lows, obviously, and it's a downtrend, lower low. It's going to be coming back up, and it could be hitting this area before it comes back down. But right now, it isn't a good area to buy. But if it goes back a little bit lower, you can buy again. Okay, that's pound odd. Your NCD, pound NCD is going to be kind of similar. Let's go to the weekly. Ooh, this is nice. This is a nice area to buy. Oh, if you missed the buy, you probably missed it. Okay, it went up already. It may come back down, but it's just a good area to buy. Right here, all this was a good area to buy. And we probably missed it, but we're looking to come back up here and to come back up here. Okay. So I would be bullish on your NCD, pound NCD. It might come down a little bit lower. This is kind of neutral for me. Overall, I'm bullish on pound NCD, but as of right now, looking at this chart from where it's at, every time it pops, it's got to dip low enough for me to to buy. We buy dips, right? And right now, this was probably the time to buy. So I would have to wait for it to come back down for me to buy. If not, it needs to go a little bit higher, wait for it to pull back, and then buy. But overall, I'll be buying this market of pound and CD. Okay, these are areas to look for buys right here. This is a good area to buy. And this is in a good area, perfect area to buy. Okay. But right now, it looks like it's in this range. Currently. But all in all, this is anywhere in this area right here you want to buy. That's a big range. And anything in this area right here, you want to sell. Okay. This range right here, we're talking from this price right here all the way down. That's a 900 pip, right? So you have to trade very small, trade very light, and it's possible that it could come this low. But right here, this I would even look to buy. When it dipped right here, this was a great time to buy, right? And you put a couple buy limit orders, but this was a great time to buy. But if it comes up here around this area, anything in this area, I would not buy. I would look to sell, okay? Because you can tell when it's in this range in the market right now. Great time to buy. But right now, it looks like we probably missed the boat. We need to wait to dip or let it go to the top here and wait for a pullback, if anything. Let's see. Yeah, so it's just swing high, swing low. Yeah, you can still probably buy it. You can still probably buy it. But be ready, if you go into a little bit of drawdown push against you, be ready. But I don't see anything from a fundamental catalyst that says that NCD is going to be strong. And if anything, I'm looking for British pound and euro to be strong. Okay. All right, I'm gonna go look at one more market, and that is Bitcoin. And then we'll go ahead and close this call. Bitcoin. Bitcoin is in this nasty little range, ain't it? Doing the same thing. All right, so here's a good thing though, right? This is very, 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 very key important. That right there. That price point that Bitcoin's having a hard time breaking. What is that price point? That is 19,400. 19,400 price point that Bitcoin is having a hard time breaking, right? This is a very, very historical price. I don't see Bitcoin going lower than even maybe 17, but I don't see it going anything lower than that. There is a price point where it becomes unprofitable for miners, right? And we got a Bitcoin halving coming up next year. So for Bitcoin to, am I right? Bitcoin halving next year, 23 or 24? I think it was 23. 24? Okay, 2 years. Okay, we got Bitcoin halving coming up in the next 2 years. So, but for Bitcoin to go lower than this, I don't see it coming. I don't see it coming anything lower than this. It's having a hard time right now at that 20, a little bit over 20. And I don't see it going any lower than that. So I can only say that Bitcoin price will be coming up to 39. Go to daily. This is even better. Let me know if you guys can see that. We got my order blocks here, got my order blocks here. This price right here, there's 29. You can see where the imbalance is. Right here, that was a big imbalance. It didn't cover that. It came a little bit, It was creating higher highs, higher lows, higher highs, higher lows. And Bitcoin price went up as far as 25 before it pulled all the way back to as low as, 20,000 or just below 20,000, right? And now it's slowly coming back up. But the previous weekly low at 21, and it broke that a little bit to, yeah, well, this is on or under, right? So depending on what exchange you're at. But the monthly low is 18,000. I don't think we're going to see that. Now you saw this trend line here. It broke out of that range here. Here's where I'm seeing price Bitcoin. I see Bitcoin eventually, and it may pull back a little bit, but again, it won't break below this. I don't see that happening, but I do see this happening eventually. Okay, so 30,000. Now you can mark it on your calendar or on your notes that 25,000 is the break of structure or the previous weekly high for Bitcoin. So Bitcoin went as high as 25,000, which was great, but it's not enough to cover this imbalance here. That was nothing but sellers that orders need to go back and get mitigated, right? And that gives us right into this price point of 29 and 30, okay? Once we see price breaks above this 25, then we're good, right? This is going to be a really good price point. This is another key support area around 25, 26. So this is going to be the magic area to where price needs to get mitigated and break from a structure standpoint. So $25,000 for Bitcoin is the structure that Bitcoin needs to break out of that range. So we're looking at in the range of 18,000, 18,700, and 25. So in this range right here, we could be seeing this a little bit until it finally breaks. Okay. So if you were to buy, if you were to trade Bitcoin, you would want to buy it now. It's a great place to buy it. Get out. Buy it, get out, buy it, because it's in this trading range right here until it gets back up into this trading range, and it will come back up. It's eventually going to come back up. Go to the weekly again, so you guys can see that. All right, we just talked about how we can see from the top of the market and the bottom of the market, where price was up here as close as 69, and now it's down here to a historical record low of the year since 2017, around 20,000 price, 19,000. It went as low as 18,700, hasn't broken, hasn't come back and revisit that since. We probably won't see that for quite some time, as we know the market down here, you guys can see it. It's been way oversold, and it's already taken a big reduction this year of over 70%, I believe. Let's see. Yep, 74%. And that's it, right? So this is the Bitcoin winter, and it lasts typically, what they say, about 12 months. Have you guys read something like that? Bitcoin winters historically have lasted around 12 months. This has been, let's see, I think it's like 22 weeks or something like that. It's lasted. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So about 11 weeks. We're halfway until Bitcoin winter. So it's going to eventually make its way back up. And I'm excited about that, because this is a great time to, you want to hold, buy more. And we saw 25,000 for the first time. Think about this. We haven't seen 25,000 since June 15th. So in June 15th, we haven't seen prices break below June 10th. So June 10th, when price broke 25, we haven't seen 25,000 since June 10th. So think about that. So June 10th to now August 20, when did we see this price? August 15th. So basically 2 months, we haven't seen 25,000. It finally hit 25,000, which is great. So now it finally, this is kind of like the warning shot over the bow, right? It finally broke out of 25,000, came back, retraced, and now it's going to look to get higher, right? Come back to mitigate, and then we're looking to see the next push. So this was the first push, right? You got to think about it from that. This is first push, pull back. The second push might get 27, 28, push back, and then the next push, okay? And then pull back, and then the next push, and then pull back, the next push, okay? So that was the first push, that was the first wave. It's pulling back, we're gonna see a second wave, a third wave, a fourth wave, and a 5 wave before we see any type of major correction, right? So waves kind of happen typically between 4 and 5 waves. Okay, and then we might see a nice little margin correction. But once we get into that 4th 5, I don't think we're ever going to see 25,000 ever again. Once we get into this trading range, all right, we won't see 25,000, anything lower than 30,000, probably by year end. Okay, hope that helped everyone from a technical standpoint. Again, so next week we'll be looking to do some live trading. I'll give you guys some dates in the community, and we'll be able to get connected. I hope this was really helpful for you guys to let you guys know where we're at. This was good for me. I haven't done a full market analysis. I looked at some charts here and there, but haven't did a full analysis. So I'm sorry if it took longer than normal, but I hope this was great for you guys and let you guys know where we're at, let you know where you're at, and see where you're doing on your charts. But hey, yep, it's good to see Brad. Hey, Lev, awesome. Good to see you guys. Hey, Gene, hey, how's it going? Thank you for joining in. And hey, guys, hey, I'm excited. I'm looking forward to finish off the rest of this week and really do some good things. I got some things that I'm working on with some gold trading. I've been working with my coder as well to look for some great opportunity for you guys. So more things to come. I'm really excited. Okay, guys. And other than that, enjoy the rest of your Sunday, and I'll put some information for some coaching sessions for next week so we can get in some live trading sessions. Okay, guys, enjoy your day. Enjoy the rest of the week. Okay, bye-bye.